the way I understand it, a blood marrow or bone marrow cancer. I see Jeffrey's on, so he knows a lot more about this than I do. But anyway, I'm doing fine. They caught it early, and I'm on meds now, and I think everything, my doctor said my lifestyle should not change dramatically at all. So I'm going forward, and but I did not want to commit to that daily report anymore because it becomes a grind, and I just, if I need to sleep in some mornings, I just don't want to do it. It's a big commitment. So anyway, this is what we're going to do going forward. We've had the Insider Club. Ian and I had that for 17 years, and I'm continuing, but I'm changing it. And many of you know this already. I see Louis Wilson and Louis Anders are on. I'm glad to see you guys. That's great. I have a lot of friends that are showing up here. And thank you for all of the emails. I've been inundated, very heartwarming and gratifying. But let's move ahead. That's in the past. I'm going to continue the Insider Club, and you can do it if you want to try it out. It's $25 a month, and you can cancel before the next month, or if you want to go ahead and commit $200, you get a 33 1/3% discount, because the $25 a month obviously figures out to $300 a year. You can see what I'm planning to do, and I've done this some. I kind of I wanted to get another one or two up last month, but I had this health issue to deal with, so I got a little bit behind. But I still posted 4 examples, and these are pretty much educational, but I try to get them out before the trades go away. So when I do this, I'll be doing it either in the evening or early in the morning. Preferably for you, I would imagine it would be better if I did it late afternoon after the market closes, or early in the morning, so you can take a look at these and decide. Yeah, thank you, Jeffrey. Yeah, that's what my doctor has told me. So I feel good. I'm very optimistic. And if I have questions, I will certainly call you. Okay, I'm sorry. I saw Jeffrey's note posted over there. Anyway, we're going to be looking at stocks, and I'm going to review the ones that I posted this last month. You're going to get periodic updates to my filters, chart views, warehouse views, combo ranks, and those will be in the form of an add-on. Matt and George gave me that ability, oh, I don't know, 6 or 8 months ago, and it's really been great for keeping everyone up to date. In the webinar series, I am always, during those 2 series that I've had, I'm always making changes and adjustments and additions and so on. I can just post them, and you can just go to the link and download those files and update, and then we will be in sync. And with HGSI, as you know, there are always new ways to get to the information, and I'm constantly trying to think about how we can get the most out of the program. So you're going to be kept up to date. Now, I keep a historical database of what I call non-indexed files, and that includes primarily the top 50 group inclusion report and some other files. Why don't I just quickly go over there right now? And I do not know if I will continue to maintain all of these. Some of them may not be necessary. The primary ones are a history of stocks and groups going up and down. I keep Woodward and Brown and Morales and Casher Smart groups. Sometimes I wonder if that's even necessary, because I spend most of my time in these groups or the top 100 raw combo stocks, which is a Woodward and Brown smart group. I've been collecting the VPA just for historical purposes. Other than that, it serves no purpose because these are all VPA signals, both up and down. I thought, when I ran a report, it would be nice to see if there is a VPA signal on that date. Top 50 group inclusion report. This is a primary prospecting tool, and this is something that many people are using. It uses smart groups, Woodward and Brown smart groups, some of Jeffrey's smart groups, Dave Steckler, Gallardi, and I think that's it. But it really does a nice job of bringing the leading groups and stocks to the top of the list. And then this one I will probably eliminate. It is just stocks in the top 50 group inclusion report that have pulled back from the prior day's pivot high, essentially. And then I do keep track of earnings due during earnings season and earnings out. And then some most active options, and then new issues, IPOs since 2013. I'm maintaining a database of that, so you can, or so we can scan on IPOs going back to 2013. HGSI is currently set up in the smart groups. It only retains under starters. It only retains IPOs going back 6 months. So I decided that I located IPOs going back to 2013, and I'm adding these new issues to that folder a couple of times a week, and that will be updated on weekends. So what I'll do for the Insider Club subscribers and the webinar attendees, of course, I will post my views, filters, and combos, and also this updated group. All you have to do is go to your add-on file, update. I'll send the link, just update it, and you will have all of the current information. So that's another benefit of being here, or being in the Insider Club. I'll do market summary videos when appropriate. I think I'm going to feel pretty good, but especially when there are significant changes, I'll come out with some videos. They probably won't be very long videos, but I'll try to point out the highlights and use my top-down approach, which you're all going to have to do yourselves now since I'm not doing that report after the first year. But really, as I said in the report copy, you could do that top-down, use those top-down views and really get a strong sense of what's happening in the market. You could do it anywhere in 5 to 15 minutes, depending on how quickly you move and how much information you want to absorb. But HGSI is absolutely the best program out there for top-down analysis. There's no question about it. Just, I don't know if he's on, but I just got an email from a customer in Sweden who was a Market Smith subscriber. He dropped Market Smith because of the abilities, the top-down abilities of HGSI and the prospecting capabilities. So there's really nothing out there that's any better. So as far as these webinars, several have taken. I've done 2. The first one went over very well. The second one was better, as you would expect, because I'm getting better at doing it. I really enjoy doing the webinars, and the feedback I've received has been mostly positive. Of course, there's always a few things, but mostly positive. So if you are a member of the Insider Club, the webinars are $4.95, and then if you take a session, all future webinars are only $100. And I'm already getting many requests about when I'm going to start the next series, and I think I'll try to begin one in February. There will be new material, there will be new files, Marilyn, thank you, Marilyn. Well, I'm always adding new things. I'm, modifying techniques. Things are added to the program that need to be integrated into the process, and so on. So that's the deal. $100 is pretty reasonable. I did 11 live sessions this time. The sessions are generally held on Tuesdays and Thursdays after the market. I'm going to have to alter that day because Tuesday is the day that I have to go in for a shot every week on Tuesday afternoon at 1:30, and it would be pushing it to, well, it may not be pushing it. I'll have to see how that goes, but I may do it on Monday and Wednesday or something like that. We go for about an hour, hour and 15 minutes, and that's enough. It doesn't make sense to go any longer because there's too much information to really absorb, and I can only talk for so long. So that works out well. Now, really, the whole theme of these webinars is defining risk and looking for good setups. We don't buy extended stocks. We wait for these stocks to go from an expansion to a contraction, and then we look for trades. We put orders in, buy stops or buy stop with limits, and get stopped into the trades. It's worked out very well. A lot of people are doing extremely well. A lot of people are doing a lot better than I am because I haven't been training a lot, obviously, recently. Kerry, are you on? Yeah, you're on. He sent me a very, very nice note today about how he has really made great strides in trading, and not only has it helped him, it's helped me. I've pretty much changed everything I do, and everything is based upon defining risk and letting the trades come to me and using hard stops. Yes, you get stopped out sometimes. That's the way it goes. But a lot of these stocks that you don't get stopped out of, you wish you would have been stopped out of them. And although I missed the Cort trade, C-O-R-T, which is one of the first trades that I did a video on, it was right before the election, and I was really afraid to take the trade. But look at Cort. When I did the video, this was the buy point coming off of here. The trade had to come to you. It was either here or here in the video. I'd have to go back and look. Made a tremendous run. Trailing stop for anybody who got into this trade took them out of this trade. Now, had you just stayed in without a discipline, controlling your risk and based upon a stock by trailing stop, look where it's down around $8 now. So much was given up. So that's essentially what we're doing in these webinars, and I think it has turned out well for many people. It gives people the confidence to take trades because psychologically you are defining your risk. You know how much you can lose. The only way you can get hurt is if a stock gaps against you, and that does happen occasionally. It happened to me. But still, I'm way ahead on risk. So anyway, let's move on. Let's do a little review of what I talked about this last month. And what I'm doing is I am talking about specific stocks that catch my eye, and I'm going to start incorporating some ETFs into this too, but I'm pretty much a stock guy, as I think many of you are, so that is my main area of focus. Also, we have the ability and the insight of group rotation, which can also be applied to ETFs, but it's just an old habit. but ETFs can be analyzed pretty much in the same way as stocks. I mean, you're not going to get the individual fundamentals, obviously, but as far as the technical aspect, yes, we can do that. So let's get started. I'm going to take these in order. First of all, I'm going to bring up the page, the first one and let me show you the whole page here that I discussed, and this is the way I do it. I was going to take this trade. I had an order in, but I had a stop limit order in on this one, and it gapped open the next day, and I didn't get filled. I didn't want to chase it, but in retrospect, you know, I should have chased it, but that's the way it goes. So the way I'm handling these is I am looking at the stage of development based upon the weekly chart, and this well, Stan Weinstein was probably the first guy that, I don't know if he was the first guy or not, that came up with these different stock stages. And what I'm doing on the weekly charts is I am indicating what stage they're in. And when I analyzed TMST, it was under accumulation. It was, you can see that on the weekly chart, it was starting to be accumulated. Here's an effort to rise flag, and on the 10-day or 10 period, it's not 10-day, it's 10 period, the VPOC had turned positive because the price was above the blue line. Now the VPOC is the volume point of control, and I use a 10 period 10 bucket, and I'm not going to get into that right now, but it's a trigger that I use for getting into stocks. Another thing, another confirming thing here is you want to look at the volume. Look at this weekly volume chart here and compare it to the last 10 or 20 days. Right there, that tells you that there is a lot of interest in this stock. And on the week where I featured this, here was the volume for that week. Now here is the daily chart. These green lines here, the vertical green lines, represent a pullback from what I call the pivot high, and the buy point was right there. I put my stop limit order in a couple pennies above that, and it just happened to gap open that day. So my call was right, my analysis was right, but I just, if I would have had just a stop order and not a stop limit, I would have been filled. But I didn't get filled, but some people did, and that's the good news. I want people to make money. It's not just about me, it's about customers. But going here, let's look at this one a little closer. This here, area here where the VPOC 1010 turned green, went from rose to green, that was an early buy point coming off of here. Now there is no green line here. This is a rose line because the VPOC, or the volume point of control, was negative at that point. So this would have been a really early buy, but look here on the prior day, that is an effort to rise, and this daily chart corresponds with the weekly chart over here. So we're looking for, in this instance, we're looking for a stock that is starting to show accumulation and really an early buy. Now, I didn't see it here, but had I been scanning with the filter looking for VPA flags today, it would have shown up, because I don't have a requirement that this be positive. But scanning with another view that I have, when the VPOC 1010 turned positive, it would have appeared this day. But so I missed this run. I mean, I don't like to chase. So what you do is, this is what I'm talking about. This is the expansion and what we're waiting for is a contraction. This is a much safer place to buy, even though it has moved up sharply. Now, yes, sure, you can buy it here and here, but the whole strategy is essentially waiting for contraction before you get in. So that would have been the buy point, and now let's go back to the actual view. Well, before I do that, let me scroll down. In this instance, I put the sort on the combo, and these are my risk parameters. This is a spreadsheet that I provide to the webinar attendees. And my risk on this, had I been filled at the buy point of 1410, which I wasn't, my risk would have been 6.10%. And that would have been buying 300 shares rather than the 290. My total risk with a 0.5% risk on capital was only $258. I'm not playing big dollars during these webinars, but I am using real money when we do the webinars. So something we never did at Palos Verdes, and that's another good example of why webinars are superior. Now, okay, so this date right here, let me check that date out. It was entry date 11/22. No, I'm sorry. Yeah, 11/22. So let's get out of here. And this is what happened. You can see the weekly chart. The stock has continued to move up. There was a pullback last week, which is represented right here. This was the opening gap, and I had my stop limit too tight, so I missed it. But some idiotic firm came out on this day, and somebody probably knew about it the day before, and downgraded this stock and the steel stocks. Now that wasn't a very smart move, but it certainly gave people that were the opportunity to get into these stocks on the downgrade. Now, you know, there's always a lot of discussion about market manipulation, and I consider upgrades and downgrades as part of that elimination, because when there is a downgrade, what happens? The market makers can lower their bids. People become fearful, and when they're fearful, what do? They try to get out of position, which was obviously the wrong thing to do. Now, anybody that got in this area, if your stop's too tight, yeah, you would have been stopped out. Oh no, I'm at the wrong spot here. I'm sorry, here. Here's the buy point. You may have been stopped out if it was too tight, but that is so irritating when that happens. But you can see what happened after that. The steel group, there was a little pullback in the whole group that day when they were downgraded, reversed, took off the next day, and it was a nice trade. And guess what? The steel stocks are basing again right now. This is today, I believe, Wednesday. I still have my intraday update on. So take another look at the steel stocks. I don't know, it looks like the market was gave back a little bit today. It's had a tremendous run led by banks, semiconductors, and so on, and steels. Steels has been one of the primary groups. Now you can see that as Timken came off of this, it was a little bit weaker than its group, because the group was holding up around here, coming down but going sideways. This came down just a little bit more, not much though. But X or U.S. Steel yesterday was a leader, which was showing up as steels are trying to regain their footing. We're going to talk a little bit more about steels in another stock up here at the top. I want to switch gears to the next stock, and this is INVA. Now I have this set up here with multiple windows, so you can see that it goes into the daily and into the weekly chart. Now I do not know anything about this company. Jeffrey probably does, but the reason it caught my eye was for the fundamentals. And this is why you don't buy just off of fundamentals. But this is a stock that has a long basing period going on right now, and it will remain in my watch list, primarily because of what I see up here in the numbers. Now you can see over here in the daily chart that the group, it followed the group up, and then the group has done nothing, and this stock has actually followed right along with the group, although now it is slightly outperforming it. Let me go, I'm going to go to the, and we're going to take a look at this as it was back on that day. What caught my eye was I was scanning for VPA flags today and VPOC. There was a test for supply. In other words, the stock traded down and it closed at the top of its range that day. So it was under accumulation. The test for supply along with the VPOC tells us that, and the daily range. Daily range is important. All these wicks down here suggested that it was under accumulation that day. But notice where I put the buy point and support. I put support lines right across here. That was kind of an arbitrary line, but the buy point is up here. And I was not interested in this stock unless it took out that high. In other words, it has to prove itself. Why just go in and buy a stock because you think it'll go up? In the past, yeah, I would do that. A lot of times I ended up with a bunch of dog stocks that really did nothing. Now they, thank you, Jeffrey. See you later. Now they, if you just buy it, you don't know what's going to happen. Once we put a position on, it's totally at random is what I'm saying. So if we see more volume coming in and if it takes out that high, that tells us that there is some activity in the stock. There's interest in it. So when I set up the spreadsheet, and I'll go take a look at that in a second, I believe that I put this high in as a potential buy point, and it never did hit it. But what I put over here is a stage 1 stock. It's a stock that is essentially being neglected. It's consolidating. It has to be advancing to really be under accumulation. We use that term loosely, accumulation, when a stock is bouncing back and forth, but it's really consolidation. Accumulation doesn't happen really happen until we start seeing some volume come into a stock and seeing it start to move up, which indicates buyer interest. Now another thing that caught my eye is this volume spike, but it was on this day here where the stock closed down in its range. So it tried to break out after this gap. Here was a gap up, gapped again, and then it tried to go, but there were sellers up here to meet that. There was a lot of resistance because it closed in the lower third of its range. But still, this volume here and on the weekly chart says that there is some interest in owning this stock. Maybe accumulation, but it has to prove itself before I would buy it. And we're going to go take a look at where it is today. Let me scroll down here, and the high was 1134, so the buy was 1136. If it hit there, And I'll scroll over to the right if I can. See, this line's right at 1136. Now let's go look at it live. Okay, I guess I'm already here. And if I put a crosshair on here, and I just usually put my orders in as a day order. I don't put a good till canceled in. Sometimes I wish I would have put a good till canceled in because I miss trades, and that may change in the future. It just depends. But you can see the crosshair. Here was the buy point, and it never did reach that level. But since it is under or consolidating, I almost said under accumulation, and the revenue and the earnings are going up very nicely. And the next quarter estimate's 450% increase, and then 285.71% increase. Even though it's not a buy now, it will remain in my watch list. If with this long of a base, if true buying interest comes into this stock with those numbers, and if the group starts cooperating, so much of it is based upon the group. I think this stock has a great potential to go much higher. But those conditions have to be met. It has to be the group. We have to see buying interest with volume. It has to prove itself getting past resistance. The VPOC 1010 has to be positive. But the fundamentals look absolutely great on this. Now, there must be news on this stock that I do not know about. But just keep it in your watch list. Just because it hasn't happened yet doesn't mean it won't happen in the future. Okay, let's move up to the next one, Steel Dynamics. I'll go to the page. Now, I put out a video on this about the whole steel group, and I concentrated only on the steel stocks, which are growth stocks. They have to pass the growth filter. And I put it out, I believe I put this out, well, I know I did before the market, before the stock went, or it had actually met the criteria the day before. I missed it by a day. But you can see, looking back on this, that the VPOC turned positive. I want you to notice that the volume was coming into this stock as it was starting to make it move. Now, here is an excellent buy point from what I teach. The pullback, you don't chase it there. You let it digest that gain. When this green bar appears, the spreadsheet will tell you where to put your buy stop. That was a buy there. Here's another one here, another one here, another one here. And then by the time I looked at it, it was right here, but it was still looking good. Now, this was under accumulation. You can clearly see when accumulation happens. Here was a little pullback. This was on the weekly chart. It went from expansion to contraction, and then it started moving nicely. And why did it move? Look at the group line. That's all you have to look at. These lines are so important. Now, this one, the risk was only 3.16% with a fill at buy plus high 3673. Let's see. Well, the high on that day was, so I set it up for 3673 for the following day because the high on that day was 3671 and add 2 cents, and that was after this effort to rise. So the buy was actually the next day, and let's go look at that and see what it did. I can't remember, to tell you the truth. 36. Okay, here was the signal. Let me zoom in on this a little. I guess I'm on one already. I'll zoom in manually. So here was the buy point, according to the spreadsheet, was 2 cents above this, and this is another one that I missed because I had a stop limit order. You can see the gap up. I'm getting great at picking these stocks that gap open the next day. But it had a short run following the group. It was kind of late in the cycle for this one. But sorry about that. But it's going again. Look at it coming down. This red line is the 18-day exponential, and the other two lines, which are hard to see, they are the 3 and the 6. If the 3 is above the 6 and above the 18, that's a positive. It is currently at the point right now, again, that if it takes out yesterday's high with 2 cents above that, that is a good place to put a buy stop in. So what I'm doing is I'm recycling stocks that I looked at over the past month. You don't always have to do fresh research. Just keep a list, go back, wait for the contraction, and put a buy stop in. The sell stop, well, if you want to make it more conservative, down below this wick. So that price, let's see. Okay, right down here in the lower right corner, about 35.55, and the buy stop would be approximately 37.86. Yeah, it's a little bit wide. You aren't going to be able to buy many shares, so you may want to tighten that up. Use the low below this wick here, the effort to rise. If it comes back down and takes that candle out, it's probably a failed trade anyway. Now we have the market to consider. It's obviously very overextended. You may not even get a fill on this stock, but that's the way I would play it. And if I put a trade on tomorrow, that's the way I'm going to do it. I'll put a buy stop above, a few cents above the high of this. Probably put a buy limit in because once again, if it gaps up, I kind of hate to chase those gaps, or a stop limit, and then see what happens if it settles down or not, and then put a stop somewhere in here. And that way it allows me to buy more shares coming out of this contraction area. The further away you put your stop, of course, the fewer shares you can buy if you use the same amount of risk, which is the way we do it. We never risk more than a certain dollar amount. Depends on the size of your account and so on. But you have to have consistency or you'll be all over the place. Okay, the view, yeah. Tim, have you downloaded the Woodward and Brown, or it's a Ron Brown quick pick? I'm sorry, the 2016 1008. If you have, now these are the warehouse views. If you have downloaded that, the file, the charts I'm using are down here under newsletter charts. It's number 1. Okay? If you have not downloaded that add-on, just go to the website or go to your main menu and go under Help. Well, I can't do it with this open. Go under Help and go to Add-ons and locate the Ron Brown add-on and download it. And okay, good. All right, you're all set. Yeah, you know, so those are the only ones I use. Now, I've done one more this month. And really, if the market goes, if steel continues up, that steel dynamics looks like a good setup. Let's go back to Timken for a second here. Now this one has had some more distribution. You can see that because of the negative VPOC, and compare that to steel dynamics, which is positive and has remained positive. So it looks like a little better accumulation here. I would favor steel dynamics at this point. Okay, the next one is CEVA, C-E-V-A. And we'll take a look at this. And this is another stock that is in the, or was in the advancing accumulation stage. I missed this one. I saw it late, but this would have been the perfect place to buy it because of this green line with a pullback, a positive VPOC, and then volume came into it this day, and a buy stop here would have gotten you into this. Now, fortunately, or unfortunately for anybody who bought it, it really hasn't done much since then. We're going to take a look at that. But I did not even mark up a spreadsheet on this one because I didn't want to chase. I hate to chase these stocks because more often than not, when you get a big move up, there is going to be well, let's look at the weekly chart for an example. Big move up on an effort to rise. 70% of the time, after those big moves, you will see some pullback. It won't necessarily pull back as much as it did here, but it takes time to digest those moves unless it's really a story. It's something that everybody has to have. So there's digestion, and this one fell considerably, and then what happened, there was it moved up, and there was a cup here and a handle starting to form. Right here is the daily version of that. So anyway, let's take a look at it in where it is today. CEVA. Okay, here I am in CVA. The current situation. Here is, this was the ideal place to buy. Right here coming out of that, or right there actually the next day. But look what happened. This is what I'm talking about. Big move up, heavy volume. Heavy volume, big move up, effort to rise. The next day, opened here, traded up to here, closed here. See these upper wicks and the VPA flags? These VPA flags are very, very helpful. If you're not using them, you should be, because they give us insight into what is happening. So what's happening now? We are, rather than the price rejection, I call this price rejection, at these levels. You can see the group's going up, but the price is being rejected on this stock because of the big move, and there's still some resistance over here on the weekly chart, but it's setting up now. Here's the green bar. This is a third day with a lower low, but it closed in the upper part of its range. This stock is attractive to me if it clears this candle right here, not this one, because it would take some effort to get past this. Yeah, you've still got these people up here that are holding on. They chased it and they got caught, but if it can clear this one, this would be a low pivot, and this would validate that pivot the way I view it. It doesn't mean it's going to keep going up, but your odds are pretty good if the force is there, if the energy is there, if the volume is starting to come into the stock during the day. I think it's a relatively safe trade. Now, I'm not recommending these. I am just telling you what I think. This is an educational service. I cannot recommend stocks. I'll get in trouble if I do. But use your own judgment. I'm just trying to help viewers and customers, help them with the things that I look at, which I think will give us an edge. It's all about an edge. It's all about, I should say, it's all about risk, and then it's all about the edge. And the group is going up, as I showed you right here. So that's in our favor. I don't know what the group did today, because this is a group line ending yesterday. Now we have a negative force index. This VPOC did turn negative today, but if this stock can power through this resistance here, I'll guarantee you that this VPOC is going to be green tomorrow, and you can see it intraday. This one, going back to that OneNote page, you can see it's clearly under accumulation. It pulled back, but now it's reaccumulation on the weekly chart. So those are the ones that I covered this last month, and I'm going to try to, send 3 or 4, 5, whatever I feel like doing out during the month for members of the Insider Club. It's I think it's a good way to learn if you really want to get into it more. Get involved in the webinar series. It's really inexpensive compared to going to a location seminar, which we held for 17 years, twice a year. But the webinars give us so much more flexibility. And I wonder if any of you have any questions. I really don't have a lot more to talk about. We could take a quick look at what happened with the market today. I can do that to fill in some minutes. I didn't want to go over an hour, and I've gone about 11 minutes short of that right now. Nobody has a question? Do you see what I'm trying to do here? Just get your attention and my attention to really focus on those component parts. Let's talk about the component parts for a minute. The group. Okay, I'll go take a look at the markets. First of all, look at the groups, look at the VPA, look at the VPOC, and control your risk. How I monitor watch lists every day, yeah, I've kind of been neglectful. Well, okay, let me answer a few questions, then we'll go look at the market, even if I run over it a little bit. What I'm doing, David, is every day, and I haven't done it for a few days because, I've been at the doctor and stuff, but I go through a bunch of stocks, and I like stuff that looks good to me, just initially. It doesn't mean I'm interested in all these stocks. But then the stocks that I'm following over longer term, I have what I call a daily watch list, and I'll put them in there, and I'll check these every day. So essentially, I'll go through my daily list, and then stuff that I liked at the time. Now, a lot of these I don't really like anymore because, as I said, I've been neglectful because of other commitments. But they'll go in this watch list, and then, I can look at them during the day. Let's get a view in here. Just go up to my intraday views. And I can track them and see if there's anything that interests me during the day. I'll sort by industry groups, see how the industries are doing. And looks like the semis, most of them, or a few of them are good today. Steels were really great yesterday, but they pulled back a little bit today. That's essentially how I do it. I keep a daily watch list, and then the ones I really want to follow, I put in a daily watch list, and then I will edit this on the weekends. Okay, Marilyn, how could we see how using long semiconductors was a leading industry? Well, they started showing up in the top 50 group inclusion report almost immediately. That's the first place I look, and then I go to the stocks and groups moving up. And if they are in there, that's a great way to stay on top of it. Or you can do scans, VPA signals today, but primarily I look at the top 50 and stocks and groups moving up. And then I will do some other. Yeah, you can scan for a VPOC flip. Sure, I've got that in there. Let's take a quick look. And then David, did that answer your question about the... Okay, good. Okay, let me take Pete's, and then first of all, I'm going to get rid of this. I'll just do this. And I'll go to a smart group to limit my options. Okay. Let's go to stop groups, smart groups, stocks and groups moving to the upside. And then in the number 8 view, let's see, and by the way, I'm going to be making modifications to this and put a fresh one out there, and I will notify the Insider Club members and the webinar people, attendees, when that's ready to go. But volume, point of control, these all have a positive volume point of control. And here you can sort on this column the days since the VPOC. Any stock with a 0 flipped from red to green that day. And when you get the new files, there will be a more specific way to do this, where it looks just for the stocks that, let me see if I can get this to come up. Where'd my chart go? Here it is. Okay, so this was yesterday on this one. It flipped from rose to green, Pete. All right? But I am going to be posting in the next, sometime this week, a view that I used in the webinar series, which was limited only to stocks that are showing 0. Okay? Now Raymond wants to know, how can I export the list of spectrum analysis to a file? Raymond, what are you talking about, a specific group that's within that spectrum analyzer, or the whole thing? Okay. I am in the stocks and groups moving to the upside. I will go to my industry, click on it. Let's say I'll let you semiconductors. Since I'm doing that, just click over here, and move down here to the bottom. Click on, these are the semiconductor devices, as you can see, and that'll take me directly to the semiconductors in the warehouse. Now I'm going to sort on the group, and you can see that they're all together right here. Then you just change to the industry group. And, well, actually, that isn't the way to do this because it took me to the whole industry group. Here's the best way to do it. Leave the spectrum analyzer up here, click on user groups, make a new group. I'll just call this SA, spectrum analyzer. And you click on that. And it has to think about it for a second. And it's going to divide these pie slices up into the industry groups, okay? So I'm going to go into the designer, and where did I put my SA? Right here. So here are the groups broken down, and it pre-pins the dates. So if I want semiconductor devices, these are the stocks that are in the spectrum analyzer. It eliminates everything else. So if I click through to the warehouse, you can see that I have the index of these stocks. This represents the index of these 8 stocks. Okay? And then these are the ones that are in stocks and groups moving up. Now from this level, I cannot go to the industry groups because I am limited to change to the index group. They're all here already. But that's how you isolate the ones that are in the spectrum analyzer. I know I went through that pretty quickly, but if you review this video, it's really very simple. Bring up the spectrum analyzer, make individual groups. I'd like to the industry list name. Other than what's here, I'm not quite sure what you want there. Well, if you want to, are you saying you want to go to the entire industry group, not just the ones of stocks and groups moving up? In that case, do it like I did it originally. Okay, let's take a look at the market. I mean, just bring up the spectrum analyzer, click on the stock, and then go to the entire industry group. Very simple. Let's take a quick look at the market here. Okay, I know there was a lot of chatter on the Skype board for webinar attendees about OCLR. That just happens to be up here, so let's talk about it for a minute. You can see that the VPA in Thinkorswim, it generated a negative flag today. Stopping volume at high indicates uptrend in likely. What happened is this was evidently recommended by somebody from a mutual fund, said it's going to double in a year. So people, market makers, what do? They raise the price. People chase the stock, and anybody who chased it, bought it up in here, is now a loser. I do not really like, as a rule, I don't like to chase these news items, especially in a stock that is loose like this. And this is a loose stock. Look at this. I mean, it's all over the place. But I suppose some people took the trade. If they did take the trade today, if it takes out this low, I think it's going to be a dead trade personally, but you know, that's just my opinion. So be careful. Don't let it go too far against you if you chased it, if you got in. I just don't like all this resistance over here. I do not like recommendations from people on TV. Why? Because they're promoting their own agenda, aren't they? They're already in the stock. He told you that. I think it was, who was it? I can't remember. So be careful. Anyway, let's look at another one. That Marilyn, are you still in Hudson? This stock is Okay, good. It still, to me, looks like it wants to go up. Little volume today, but you have to remember, this is December 21st. We are going into a period where volume is going to continue to decline as we go towards the Christmas weekend. It too had a negative signal in here, failed upthrust. This VPA code is not the same as HGSI VPA code. Let's bring it up in HGSI. I want to get rid of this. See if it generated a flag today. No, it did not generate a flag today. So you can clearly see that the code is different. Now this is a bullish VPA flag. It's no supply, a sign of strength, but there was a contradictory VPA, a down bar closing after a pseudo upthrust. This is an upthrust. It's a pseudo because it didn't, it isn't up into the newer high territory. So mixed signals, but here it closed on near the high of the day. So to me, it still looks like it wants to go higher. I see the group has been coming down though, so you've got that to combat. But look here, the VPOC went positive today too. As long as you have your stop in place, you don't have to worry about this. You just let it go, okay? Now let's look at, here's the E-minis. Everybody thinks we're going to the moon here in the market. We may or may not, but it's had such a tremendous run, it needs to breathe. Needs to back and fill if it's going higher, and we don't know now if this is a back and fill process or if it's going to roll over. I use these EMAs, the 200, the 100, the 50, and the 18. This tells me this market, the ESE minis anyway, are still in a long-term uptrend. Now, the way I've got this set up, if I go back one, I have the 3, 6, and 18 exponential moving averages on this chart. So you can just duplicate your chart if you have that other one, and then this is a shorter term view. As long as this 3, the green moving average, stays above the 6, and it crossed back here after this pullback, this E-mini, or the E-mini futures are in an uptrend. So, I have no reason to believe that it's rolling over right now, other than the numbers are down for the day. Another thing, look at the volume. You can see we're having decreasing volume as the week goes along because we're going into that Christmas season. So it's probably just going from expansion to contraction, and we do not know which way it's going to break. So as of now, though, it's in an uptrend. Of course, the Dow's in an uptrend. This is insanity, really, but it's the place to be. And here's the Nasdaq. Now this is look at the different personalities here. Dow, 30 stocks, how tight that is. The E-minis, which are based upon the S&P 500, that's really tight. And then compare that to the Nasdaq futures, which is based on the Nasdaq 100 stocks. You can see that there's a lot more volatility in the NDX and the NQ, the Nasdaq futures. But as of right here with the crossover, that's where this went long based upon those short-term moving averages, and it broke out to a new closing high yesterday. The wicks are above that, but it was a closing high on light volume. But today it pulled back a little bit. Still, the trends remain up. We do not Thinkorswim does not have volume for the composite, so we can't judge the volume. That's why I look at the E-mini futures. Surprisingly, oh boy, bonds. Sam, are you still on? Did you ride that bond trade all the way down? I hope you did. This was a lot of pain here for the long bonds. Okay. Uh-oh. Gotta wait for these moving average crossovers. Right now is when you should be getting long. Just kidding. You know what you're doing. Okay, so the market, I mean, everything is still up if we look at the trends using these moving averages. Both the these are short-term moving averages, obviously, compared to the longer term. Wow, look at these bonds on the long-term trend. But, you know, it's up. Now look at NVIDIA. This stock just keeps going. I mentioned in my morning report the other day that NVIDIA, since the beginning of February 17th, I believe, has appeared something like 84 times in the top 50 group and inclusion report, and there were many, many opportunities based upon this technique with the green bar with the expansion and then the contraction to get into this stock. Now here the moving averages crossed. That was negative, but they crossed positive right here on an effort to rise, little run, turn negative. You know, if you're a trader, you're in and out of these stocks. If you're a long-term holder, you don't necessarily look at the 3 and the 6. This is a weekly. I'm going to make this a daily chart. You look at these, and if we have the fan formation with the moving averages in sequence, that's what you really, that really helps keep you on the correct side of a trade. Now, when it did correct down here a little bit, it bounced off of the 50 immediately. That's a gap up on earnings. You look at the volume. A lot of people wanted in, a lot of institutions wanted in this stock, and you could see there was continued buying for a few days, and then it leveled out again. But multiple opportunities to get in this stock, and I know Kerry in his note today said that he's made a lot of money in that stock, and I'm very happy for him. Okay, well, I went over an hour, didn't I? Yeah, Merry Christmas, happy, healthier. I feel great. You know, I've had absolutely no symptoms, which is what's so crazy about this. But I want everybody to have a safe and prosperous new year. Okay, Sam, the moving averages I showed are the short term, 3, 6, and 18. Exponential moving averages. That's what I'm using in my charts for short term. This is the long term. Here's the short term. These are 3, 6. If you go down to the newsletter charts, here's what the moving averages are. 3, 6, and 18, 18, 50, 100, and 200. You're welcome. Okay. Anything else before we shut it down? All right. Well, thanks for attending and sticking around.